There's 5 things you gotta do to have a good credit score. How are you guys doing today? My name is Apple, and today we are filling in the financial gap between schools and the real world by building your financial literacy and financial literacy skills as a college student. And today we're talking about is your credit score. So we're going to be talking about actionable steps, 5 actionable ways for you to increase your credit score in the next month so that the next time you check your credit score, it will be significantly higher than it is right now. So what we're going to do today is we're just going to talk about what your credit score is and what it's made up of and how you can improve it. And I did a in-person lecture about this topic, in-person workshop, whatever you want to call it, a little while ago. So be sure to check that out above. This is sort of an excerpt from that, but going a little bit deeper than we went in the presentation. So check that out for more broad topics all about credit. But this one is just about how to increase your credit score with 5 actionable steps. So be sure to share this video with a friend and let us hop right in. So first off, just to recap, what is your credit score? Credit score is a way for potential lenders to quantify your borrowing. They just want to know what is the likelihood that they're going to be getting paid back, 1 in full, 2 on time, 3 without problems. So they want to know what are the chances that you pay them back what you say you're going to, when you say you're going to, without any issues. That is what a credit score does, and banks want to see that you have a high credit score so that they know they can trust you, because banks want to lend out money. People don't realize this. Banks want to give you money. That is how they make money. They make money through interest payments. So they want to lend you money, but they want to know that you're going to be able to pay them back. So if they know that you can pay them back, they're going to want to work with you to lend you money. However, if they don't think they're going to be getting paid back, they're not going to want to work with you because they don't trust you. So the most common scale for a credit score is a FICO score. So a FICO score ranges from 300 to 850, and it's a way for, again, lenders to quantify your borrowing. So the General cutoffs for decent FICO scores, 670 is considered good. So if your credit score is 670 or above, anywhere from 670 to 850, that is a good credit score. If it is from 740 and up, that is a great credit score. So if you got a credit score anywhere between 740 and 800, that is great. 800 and above is excellent. So if you have a credit score in the 800s, that is an excellent credit score, and you're doing a great job at these 5 steps. But I think you could even take it a little bit farther. So this credit score is, this video is aimed at anybody with a credit score. Anybody without a credit score, go out and get a credit card today, because you've got to start today in order to build your credit. And your credit score is really going to determine, 1, whether the bank wants to work with you at all or not, whether they're going to approve you in the first place. Next, it's going to determine any interest rates on your payments, which are going to make a huge difference over time, like we talked about in that presentation. Even a 1% interest rate difference can make a huge amount of difference, hundreds of thousands of dollars even, over the course of a mortgage, which is ridiculous. So you got to keep that credit score in mind. You got to have a good credit score so you can save yourself literally hundreds of thousands of dollars on your borrowing over the course of your life. So you want to build that relationship with your bank in order to save yourself money and just have a good relationship going so that you guys can trust each other and work well with each other instead of working against each other. So what is your credit score made up of? There are 5 factors in your credit score, and they are as follows. The first one is your payment history. So your payment history is going to account for 35% of your credit score. 35% of your credit score is your payment history. So that is going to account for 298 points of your credit score. 298. It's going to account for 298 points of your credit score, of your 850 possible points. 298 are going to come from your payment history. So that is basically just whether you pay your bills on time and all that good stuff. So as long as you pay your bills on time, you should be all right for payment history. We'll get into that a little bit more in a little bit. But yeah, payment history is number 1. Second one is credit utilization. And this one is worth 30% of your credit score. So that is going to translate into 255 points. 255 points for your credit score, for your payment, or for your credit utilization rather. And credit utilization is how much of your available credit you spend. All right, so it's how much of your available credit you are actually spending. Next criteria is credit history. Credit history is at a 15%, so that's going to put you at a 127 points there. Get 127 of your 850 from your credit history. Basically just how long you've been building credit for and where you have been borrowing credit from. Next one, your credit mix in use, that's 10%. So your mix in use is 10%, and so that's going to be 85 points. And lastly, your credit inquiries is going to be another 10% or 85 points. Add those up in your head. and you are going to get 850 points out of the total 850 points. So that is how you get them. And again, mix and use is just how many different lines of credit you have, how many different types of credit. You got a mortgage, you got a car loan, you got a student loan, you got credit cards. That's going to benefit your mix and use. And credit inquiries is just anytime you apply for a new line of credit, a credit inquiry is going to be run on your record, and that is going to show up for 6 months on your credit report. So now let's talk about how to improve each and every one of these elements on your credit report to improve your credit score. So step one out of anything is you need a line of credit. If you do not have a credit card right now, what you gotta do is you gotta go out today, not tomorrow, not the next day, but today. Go to the bank, go to whatever bank you have a checking account with, a savings account with, and just ask them what you qualify for, what a good starter credit card would be for you. Ideally not a secured credit card, but you might have to get a secured credit card, which is just where you put a payment with the bank that they hold on to, sort of like a security deposit, just in case you don't pay it back. But unsecured would be ideal. Ask them about what you can qualify for as a student to get some credit going, because you got to start building credit to do any of these further steps. You got to have credit to build credit. That is how it works. Next is number 2, you got to use that credit effectively. But what does that even mean? What does using credit effectively even mean? I mean, obviously you have to pay your bills back on time. That's like a given, but like what else does using credit effectively entail? Well, let's break it down based on each of these categories. So payment history. Payment history is going to count for the most of your credit score. Over a third of your credit score is payment history. And the good thing about that is it is so easy to make sure your payment history is great. Make sure your payment history is perfect. All you have to do to ensure your payment history is high is pay your bills on time. That's all you have to do, is just pay your bills on time. It's so easy. And if that's tricky for you, if you're not able to do that right now, all I have to say for you is just set reminders on your phone, in your calendar, write it out. Just make sure you're paying your bills on time, because this accounts for the greatest chunk of your credit score. So you got to make sure you're prioritizing your credit history, your payment history rather. So just paying those on time. And I promise you there's going to be more nuance to these further ones, but I mean payment history, it's really easy. Pay your bills on time. That simple. Okay, next, credit utilization. Credit utilization, what you got to do for that is you got to keep your credit utilization low. You want to keep that as low as you possibly can. Banks don't want to see you spending every single dollar that they give you, so you got to keep your credit utilization low. Well, how are you going to do that? Okay, so the first thing you can do is ask for higher limits. And this is how you do it. Hi, I'd like to request a higher limit on my credit card. Yep, why would you want a higher limit on your credit card? Well, I would like to reduce my credit utilization ratio, and I think having a higher limit would allow me to do that. Yep, sounds good. It's really that simple, guys. So that is the first thing you gotta do to reduce your credit utilization. Ask for higher limits. If that's working, if that's not working, then just don't use your credit card for everything. Do not use your credit card for everything if that is driving your credit utilization too high. If you're not able to get a higher limit and you do need to spend money on stuff, then don't use a credit card for all of it, because that's going to drive your credit score lower. So find other ways to pay for stuff. Use cash, use a debit card, but don't put everything on your credit card if that's driving your credit utilization through the roof. Next one is length of credit history. That is number 3, length of credit history. And you want that to be long. You want to have a long length of credit history, because lenders want to see that you are able to pay off stuff over the long term, and they want to see that you have experience with credit for a long time. So the way you do this is, number 1, like I said before, we're starting today, not tomorrow or the next day. So you got to go out and you got to get your credit card today. You got to get a line of credit started today in order to start building that credit and get that credit history up, because that is the toughest thing for young people to do. They always fall behind on their credit history. I know, even me, I've been building credit for like a year and I'm still behind on credit history, and it's still hard for me to get approved for stuff because I only have a year of credit history. So in the grand scheme of things, a year is not even a long time. You got to start building credit today is what you got to do, okay? So that's step 1. And step 2 is use your credit regularly. So you don't have to use your credit card for everything. If you go out today, you get a credit card, you don't have to put everything on that credit card. You really don't. You could just buy, like, I don't know, if you buy gas, if you drive a car, just buy your gas with your credit card. Or just pick like one thing a couple times a week to use your credit card on. That way you can be consistently building credit history, and they're gonna classify your card as active instead of not active. So you gotta make sure you're using it regularly, or else the bank is gonna say that your card is not active anymore, and that is not going to be helping you build any credit if you don't have an active card. All right, mix in use. You want your mix in use to be diverse. You want to have lots of different lines of credit, and a great way to do this, it's not often utilized, is to get a personal loan. So a personal loan is usually used by banks to sort of combine a bunch of credit card debt into like a single place. A way to refinance all your credit card debt is through a personal loan, but you could utilize a personal loan for really anything, and just having that additional line of credit, additional mix in use, is great for boosting your credit and boosting your credit score. So apply for a personal loan if you're looking to boost your mix in use. If you feel like you don't have enough different lines of credit currently, a personal loan could be a good way to go for you. Additionally, you could invest in real estate. So investing in real estate is a great way to diversify the lines of credit that you have. Getting a mortgage, anything like that is a great way for lenders to see that you can manage a bunch of different lines of credit simultaneously, which is what mix in use is all about. Lastly, don't go crazy though. Don't go borrow money on all this stuff that you don't need, because opening too many lines of credit in too short of a time period can be problematic, like we're going to get to in credit inquiries. But and also interest. Interest really is a thing that happens pretty significantly when you borrow money. So don't borrow money that you don't need to be borrowing just to boost your mix in use. It'll definitely come with time, and since it's only accountable for 85% or 85 points on your credit score, it's not the most critical. Lastly is credit inquiries. So how are you going to boost your credit inquiries? You're going to boost them by making sure your credit inquiries are spread out. And what I mean by spread out is not applying for too many loans too quickly. So if a bank sees that you applied for like 10 mortgages in the last 2 weeks, they're gonna be like, what is going on? Is this person getting rejected by 10 different banks? Why do they need 10 mortgages in 2 weeks? Like, that is just a bunch of red flags for banks, for potential lenders. So you gotta make sure that you're spacing out your credit inquiries. You're applying for credit only once in a while, only when you really need it, in order to make sure that your credit inquiries are not showing up as red flags for potential lenders. And that is going to account for 10% of your credit score. So pretty significant, but not too bad. Either way, it's very easy to make this a beneficial 85 points rather than a negative 85 points, basically, that is going to work against you. So you got to make sure that your credit inquiries are doing all right and that you're not applying for too many lines of credit too fast. So really what it really comes down to boost your credit score, to build your credit score, what you have to do is you have to work to improve all 5 of these categories. But if you work at all 5 of these categories, you're going to start to see results very, very quickly. I mean, if you just start doing like 2 of the things that we talked about in this video, you are going to see results within the month. I promise you. I promise you that. Because these things, they're very, very impactful, and making a small difference can make a huge impact on your overall credit score. And honestly, the one thing I gotta ask of you, if you're watching this video and you don't have a line of credit, please go out and get a line of credit and start building credit, even if it's just a little thing, even if it's just like going out and putting your groceries, your once a week groceries on your credit card. I don't know, just something. Just start building credit today, because you're gonna thank yourself 5 years down the road when you're able to get a house, when you're able to get a business loan, all this good stuff. You're really gonna thank yourself 5 years down the road, 10 years down the road, 20 years down the road, if you started to build credit early, because you're gonna save yourself so much money, literally hundreds of thousands of dollars in interest you're gonna save yourself if you start early. So that's my spiel. That's how you can boost your credit score today, and by the end of the month, you're gonna see an increase in your credit score. I can guarantee you, if you apply even 2 things that we talked about here. But that's it for the video, guys. If you enjoyed, do leave a like, subscribe, share this video with a friend so that they can see how to build their credit, because everybody should know how to build their credit. I think that is a fundamental thing that all young people should know, how to build their credit effectively. I will see you tomorrow, and until next time.